What's up, everyone? Happy Sunday and welcome to Go Rush Weekly Watch List. Today's Sunday, March 19th, and there's a bunch going on in the market right now that I kind of want to discuss, make sure that we're aware of. Excuse me. Before I get into the charts, I just want to discuss a few things some news that came in over the weekend. So a coalition of central banks, including US, Canada, England, Japan, the ECB, and the Swiss National Bank have just announced coordinated action to enhance liquidity. So they're going to plug money into the markets, right? So bye-bye quantitative tightening. As we know, if we've been trading for over a couple of years, right, 3 years or so, quantitative tightening is when the Fed kind of tightens everything up, increases rates, slows the flow of money pretty much. And what this sounds like is that they're looking to make it easier for money to flow around, right? Especially due to what's going on with the banks that have just gotten bailed out. And then Credit Suisse is another one that's just kind of defaulted on a bunch of its debt, and UBS is set to acquire Credit Suisse for over $2 billion, one of the largest banks in the world. So that's all news that kind of just came in, and so I think that we're going to have a very interesting week. We have the Fed meeting this week with Jerome Powell speaking on what day is it? I want to say it's Tuesday. Let me just double check. Let's see. FOMC. Yeah, FOMC starts on Tuesday. And then at 2:30 on Wednesday is when Jerome Powell's going to speak and kind of discuss what occurred during the conference. So another interesting week in the market. We might get some chop into between Tuesday and Wednesday, from now till Wednesday or so. But let's see. So the first one that I want to look at is, and I'm just going to go through this list. I have about, 25 or so, 30. I don't know. I'm just going to go through them as quickly as possible. So the first one on the list is SPX, obviously. SPX has been trading within this range, this yellow box that you see on your screen here, for about, since this date, which is May 6th of 2022. We've been kind of trading just inside this range. Here with this nasty drop, we caught some support, came back into the box, bounced, found some resistance, popped out of the box, worked our way back. So we've just been trading within this box and like slightly peaking above and below it. So we're still within the same range, right? Still within the same box. Last week we kind of made a new low, right? Here's Monday's candle. We kind of popped up, came back down, found support, made a nice green day on Thursday, and then Friday kind of came back to test the previous resistance. All that to say, pretty much nothing's changed in the market. I think it's going to be a bunch of, it's going to be a bunch of trying to catch opportunities such as this day here or even Friday, right? Catching the opportunity as it arises. Now, you'll notice, if you look at the chart, you'll notice that I have this kind of pivot drawn here as well as this pivot here. If we do escape some of these ranges, right, and if we come down below this level at 37.82, I'll be targeting this 34.91, right? And then obviously above 41.30, but also really truly above 41.94, we can try to target that 43.25. So just some levels that I'm going to keep on my chart while all this mess occurs. These will probably stay intact for quite some time. So just be on the lookout for that. Now, I have a kind of a new system for this week. I'm going to, there's a lot of setups that can go either way. As we've learned in the past couple of weeks, we plan for the bull side, but it goes down. We plan for the bear side, but it goes up. So, instead of trying to force the direction of the trade, I think that it's important to just kind of set up for both sides. So there's a lot of setups this week that have good plays to the upside and downside. So if you look at the kind of the colors that I have flagged here, all the blue ones have both good upside and downside setups. The reds are leaning more towards the downside and the greens are leaning more towards the upside. So just keep that in mind. So the first one that kind of has and I just, I put some blue, some red, some blue, some green, just to kind of break it up. But the first one is MicroStrategy. MicroStrategy is in the business, as far as I know, they're in the business of buying Bitcoin. That's pretty much it, right? So with all of the news of all the chaos in the banking system, Bitcoin looks like a stronger and stronger case, right? There's a stronger case for people to put money in Bitcoin. And so due to that, I think MicroStrategy is set to continue to increase. I do like it better to the upside than anything else, especially since we kind of, we formed this red candle and then we opened up above, like around the top of the red candle and broke right through it, flagged a little bit, and then continued to break out, right? So I think that there's some momentum to the upside. If you look at the momentum indicators, the MACD just put in a green part of the histogram here, and the signal and the MACD line just crossed, and we're underneath the zero line. So I think that there's a lot of push coming to the upside potentially. Same thing with the RSI. RSI is just like pointing straight up with a little bit of room, right? It's at 57.87 or so. It can go up to 70 before it gets that oversold signal. Overbought signal. And same thing with the TTM. TTM has a little bit of room before it gets back to zero, and then from there it can squeeze to the upside. So I'm liking this, and in terms of the setup on the chart as well as the momentum indicators, show that there's a lot of upside to this play. Let me throw some SMAs on this. Yeah, and we just got a golden cross, which is the 50 simple moving average crossing through the 200-day moving average that occurred just a couple weeks ago, the 2nd of March. So a lot of bullish signals. I think that this is set to continue to move up. So I've marked some of the targets here. The first target would be close above 279.61, 269.71, which we popped our heads above on Friday, but it wasn't enough to kind of hold above that level. You see the previous resistance right over here. I want to kind of trade right above that resistance. So that would be the first target. And I wouldn't enter there, but I would be interested in watching it there, right? So I'll go ahead and add an alert to that. Once it crosses that ray, then we'll be kind of advised as to some further action, right? The real play, I think, would occur above this 275.59 level. Above that level, there's a nice little gap that between here and, you can see there's some volume right over here in this area, but I think that this level here will be magnetic, right? This 290.50 would be, especially with how strongly this is pushing out of this level here over the 200, big strong push. So I think that with a continuation of that push, we can get back to that 290.74, and then above that we will hit the 300 level, which would be my my final target for this for now, right? For now, until we get to the next level. Where we decide where it's going to go. I'm just going to put it slightly above it. Let's see. Magnet strong. Okay. Just put it at right there, 300. Right. So I'll be watching this to the upside. Now, when I have it marked in blue, because it can easily, you see, the last few times that it's been here, it's rejected and fell hard. So it can easily just fall into, it could be like all liquidity for a nice push to the downside. So I'm not married to the upside. I think that it does have some nice downside. It can come back to test this 50-day. I would say test the 20-day, but by the time tomorrow opens up, this 50 will probably be right next to the 20. So it'll come back, and that'll be my first target. And then underneath the 50-day, right? So first target would be like right around here to the downside. The next target would be the 200-day. I wouldn't even try to play anything else. I would just play the moving averages. I do have these levels that I've kind of noted. Now, if we do fall below this 200-day moving average, we do have the 100-day to kind of catch us as support. But below that level, we can easily come back to test this level. And then from here, we have some nice downside. So there's 3 plays to the downside. And they might not shake out for a while, but but for now, I'll just leave them on the chart just because I think it's very attractive. We have some clear targets to the downside, especially underneath all these moving averages. But for now, I would say that this is safe to continue to move to the upside with 300 as the ultimate target. The next one is Apple. So Apple, again, can go either way. Apple gave us a very nice move on Thursday. Even like Monday into Tuesday and Wednesday, it gave us a really nice move. And so I think there's a potential continuation. It really depends on how the bond market behaves, because if bonds are showing attractive behavior, then I think that money will go back into them. But if not, then I think money's going to flow back into tech and Bitcoin and futuristic shit, right? Not so much like some of the older stuff. So I would pay attention to the bond market. I would also pay attention to energy. If energy and bonds are down and gold and silver are down, then money's going to flow into Apple, Tesla, Meta, things like that, right? Amazon. So So I would just keep that in mind. Now, what I love about this setup is that there's a triple tap here, a little bit more than a triple tap here on the 156.33 level. So we had the first tap that occurred here on February 3rd. And that was a big, massive move off the 200-day moving average. It opened up at 148 and closed at 154, but got as high as 157. So almost a 10-point move for Apple. Sorry, $10 move for Apple, which is massive, right? So this is a very strong level. We rejected it here on this day. We rejected it on this day. Rejected it again on this day. And every time we touch it, we form massive sell pressure. And you can see how big the sell pressure is. Let me go ahead and draw a box on it. Draw a box on it there. Now, every time it's been at this level, massive sell pressure. Look at all this. Look at how long that wick is, right? Look at how long this wick is. And each and every time it does it, it reverses trend. So, uptrend, smashes back down, downtrend. Pop back up, smashes back down, right? So now we formed a straight up red day on this. It wasn't, there was no joking about it, right? We closed lower than we opened. So again, it's set up in blue because we have a nice setup to the upside or downside. This can be a triple tap with a little bit of base underneath resistance right here. We can form a couple candles here at this level, right underneath that 156.33 before some momentum brings us right back up. Or we can fail and fall down pretty hard, right? So if we do fall hard, I would I'm going to go ahead and set my alert at the low of day, which is around here. I'm going to go ahead and set an alert. If we do fall down below that level, I would target the 153 and then 151 levels for maybe a 2 or 3 day swing, right? Fall below this, we might get it. We might even get it in one day. It really depends on what happens in the market. But I think that ultimate support would occur right around this level at 150. Was at 151 rather. 151, we'll have some moving averages sitting right there for support. Plus the previous support that we're kind of sitting at there now. So either way, big move to the upside above this level, right? Above this 156.33. And let me go ahead and I'm going to draw another kind of target. The first target above that level would be 157.50, which you see we rejected here and here. So we really need to get above that level before we can start to really make a big move. Now you see me zooming back all the way to the middle of 2022 here, but these are some of the levels that we want to target. Now, if you looked at the zoomed out view, you see that there's a potential inverse head and shoulders that's formed on Apple, right? Here's your left shoulder. There's your neckline. Here's your head. Right, back to the neckline. And this is very clean. And then here's your right shoulder. Right shoulder sitting above the left shoulder, right? Left shoulder is way down here. Right shoulder is formed a higher low. And so that kind of strengthens the bull case here, right? We can consolidate around this level at 156.33 on Apple. And then we got some of these upside targets that we can kind of try to attack, right? Especially that 158 would be a nice one. And then above that, we have, I would say 160 and then 162, then 164. So Apple's on top watch this week. With plenty of upside, especially since it's holding above previous resistance here. I set my alert for the break of that previous resistance because that means it's not holding a support, right? The previous resistance is not acting as support, and so we have a nice downside. So either way, this will pay out for us for Apple. The next one that I have is LRCX. LRCX, it just made a beautiful move. I mean, big consolidation throughout a couple of weeks. It fell a little hard. Bounced up, came back down, a bunch of buyers stepped in, and then big massive move on this day. This day it opened up at, or let's do low to high. It did a low of 480.46 and a high of 515. That's a 25-point day, $25 day for LRCX, right? So big massive move, and then kind of a resting bar. So there's a potential 3-bar play here if it continues. So what the 3-bar play says is basically, we can measure this candlestick from top to bottom. The middle bar or the resting bar doesn't break above too much of the resistance. And if the next bar starts forming green, then we can get a move of pretty much the same size as the first bar, which will leave us at around $540. So, and that'll put us right at the previous resistance over here. So that's what we're looking for with a 3-bar play. I'm not saying that it's going to happen, but if it does, if you do see a green candle forming and breaking this resistance pretty strongly, it can easily land us at this level up here above all this previous resistance here. So very interested in that. But again, this has a blue flag on it, so it might go up or it might go down. If it does break to the downside, then we have a nice little play, nice little $6 move to the top of this previous level of resistance here. And then if we can break below that, I think we can target the 483 level, right? So either way, a nice move to the upside or downside. Right now, I'm favoring the upside on this, especially with this, all the moving averages, the 100, the 50, all pointing up. The 20 days about to turn around and cross through the 50 in a few days if we can kind of remain where we are. And the 200-day is flat, so we'll see where it kind of ends up tomorrow, right? The next one is Coinbase. Now, with Coinbase, we have a nice wedge that kind of formed. I was bearish at the edge of this wedge, and then it kind of broke down and gave us a 2-day move to the downside. We caught support at the 100-day moving average, and then a bunch of buyers stepped in and brought it all the way back up and pretty much to kind of almost the top of the wedge, right? So big move. This is actually what's called a spring in Wyckoff theory, where it drops down pretty strong, breaks all this resistance, all the support here, drops down pretty hard, and then buyers step in like crazy and bring it all the way up. So now again, this can go either way, but I'm favoring it to the upside, especially after the spring. We're about to get a golden cross, the 50-day crossing through the 200-day in a couple of days, right? Maybe 1 or 2 days. We'll get that golden cross, which is a nice signal for algos to buy. Hopefully, if you like Coinbase, right? And then break above this previous resistance here at 75.98. We can target the body, the top of the body of this candle at 81. And then above that, we can target the wick of this candle at 87.65. So nice move to the upside, depending on what occurs in the market with. And so the thing is, like with banks, you would think that Coinbase is like almost like it keeps a store of value, but not in the way that like they do with banks, right? Not with like fiat money, and I don't really know if they offer a lending program or not. I'm not sure if they do actually. They might actually. I mean, how else would they make money? But they would do it based off of actual assets such as cryptocurrency versus like fiat money, right? So that's kind of a different philosophy, or same philosophy, different vibes, I will call it, right? So the whole point of that is, if you look at, like, for example, I'll go to XLF real quick. XLF, obviously, this financial sector ETF, and it's just been dropping, right? Dropping pretty hard, especially with all this news. The past week, which is, 1, 2, 3, 4, 5 days, we had a nice bounce, but then just red day, red. So we kind of started here, we bounced, and we came back down. Now, if we look at Coinbase kind of started here, bounced, and then continued to move up. So it's kind of moving inverse to the financial sector. Now, this central bank gathering where they're plugging liquidity into the market might be good for the banks. It might, right, or the financial sector, or it might be good for where they get their best returns. Now, let's not be fooled. A lot of these banks are buying back their own stocks, right? For sure, everyone knows that. But they're also investing in companies such as, they've invested in FTX, for example. They've invested into Apple. They've invested into Tesla. They've invested into Coinbase. So like companies that have cash on the balance sheet like to put that cash into tech stocks, like to put that cash into gold, like to put that cash into other things. So right now, if what looks attractive is going to be, for example, Coinbase or an Apple or a Baidu or something, then they're going to go ahead and drop money into it. It doesn't matter what it is. When all that money comes into the market, it might go into something that looks really attractive. For example, I think Apple looks extremely attractive based on where it's at and where it might break out to. I think that Amazon looks extremely attractive based on where it's at and where it's been in the past, right? Let's look at where it's been in the past, right? Like it's been as high as, what's this? This is 146. It's been even higher. It's been up at 189. So, so it depends. It depends on, they don't have to just buy their shares of their own company. They can buy other things. They can put, they can invest in a bunch of different things. So I think that Coinbase might be set up nicely. It's just another nice setup, right? Sorry for the long-winded spiel, but anyway, above this level, we can get to this level and that level. below the low of day, we can target the previous low of day, and then underneath that, the previous low of day. We might have some resistance, or sorry, some support with 200 day and the 50 day sitting right there. But if we do break those, we can target that 100 day, and then from there target the 50.77 level. So some clear levels on Coinbase. I like it to both directions. I think it's favoring the upside at the moment. Let's look at DKS. DKS is a clear downside play. Actually, before I get into downside, I just want to quickly discuss the earnings for this week. Let's see. We have PDD. Let's see. On Monday, we have PDD reporting before earnings, before open. We have Foot Locker. We have NIU, which is a biped, like a moped kind of company, electric moped company. If anyone's used there's a company called Revel in the city, in New York City, that they have like rentable mopeds. Those mopeds are manufactured from NIU, so that's where I know them from. We have Tencent Music Entertainment. We have On Running, which is a cool brand. Huya. Let's see. We have Nike. We have GameStop Tuesday after close. We have nobody really else on Tuesday. We have Petco on Wednesday. We have Ollie's on Wednesday. We have Chewy after close on Wednesday. Steelcase after close on Wednesday. Let's see. Not a lot of big names. Not a lot of big names, but some names, right? Some names. All right, cool. So back to the chart. So DKS, I have to the downside. DKS, it just looks like we couldn't take out the highs, and right now we formed a bunch of inside candles. So like this candle. This candle carries a certain range. This candle was within the range of that candle. This candle was within the range of that candle, and this candle's within the range of the previous candle. Now we did break out and form a little bit of a lower low on this candlestick. And actually, if you look closely, let me just zoom in on this. Now I'm not bearish on DKS for the long term. You guys know that I love trading this, especially to the upside. I do see a falling wedge kind of occurring here, which is a bullish pattern, because usually what happens is it fails to form big, strong candles to the downside, and then buyers take over and break it up. So that could be what potentially is occurring here. Actually, on our last week's call, I said that this is probably going to break down and consolidate right within this level between the 618 and the 50% fib. So right at currently where it's at right now. Now, the reason why I want it to the downside is because it failed to break up, right? It failed to break these ranges up. On Wednesday, Thursday, and Friday, it failed to make new highs. Instead, it made new lows. So I think that it has a big move to the downside to try to test this previous support here before they're continuing up to the upside. Now, again, this might fail me immediately, but I think that if we do break to the downside, we do have this 20-day moving average to catch, and the 50-day potentially to try to retest. And we haven't been at this 20-day in quite some time, ever since we gapped up, right? So that's another reason I think we want to go back down to try to test these moving averages, and not be as extended as we've been, in order to then continue to move to the upside. So everything is for an upside move. I just don't know if it's going to happen, I'm not sure. But I do like it to the downside. I wanted to break this level at 142.91 to try to touch this bottom of this candlestick here at 138.85. So that's what I'm looking for with DKS. Very simple, nothing crazy. And if it doesn't break down, if it does break up, it's going to come straight to this 151 level, and then from there it can go and make some new highs. Now remember, DKS is sitting right at all-time highs, right? The last time we were here, we've never been here. But the last time we were here was September of 2021, and now we're kind of consolidating that area. It's a good time for this to kind of break up. However, it might want to pull back to one of the moving averages first, and then kind of fake some people out, and then continue to move up. So we'll see. We'll see. Right now, it can go either way, to be honest with you, but I like it to the downside. And I think it has some downside just because it failed to make the new highs during the day. So the next one that I have is Moderna. Moderna to the downside. Moderna looks like a pattern that wants to fall, right? It came up, it gapped up, formed a new high here, and then failed to take out that high on this candlestick. we opened up here, we tested some of the ranges at the top of that candle and formed a red candlestick. Now, I think that this wants to come back down and test the previous resistance down here. And that's it. So that's what I'm targeting. Nothing too complicated about it. I think we're gonna come back down to this level here. And then from there we can kind of bounce or do whatever. But this just looks like a pattern that usually falls to the downside. So that's why I like it to the downside. Nothing too complicated about it. I would take it below the low of day for a risky entry. For a safer entry, I would take it below $148. And then I would target the 145 puts or something like that, and then let it fall into the money by the time it gets to 144. So nothing crazy. Just a pattern that I've seen emerge a bunch of times as a bearish pattern. To corroborate that, we have the 50-day crossing through the 100-day to the downside. We have the 20-day crossing through the 200-day, the 20-day crossing through the 100-day, right? So all bearish crosses on the moving averages. If we go sideways for a bit, the 50 is going to cross through the 200 at some point, and then that'll bring us down even further. So that's it on Moderna. Next one is Dollar General. Dollar General bounced here on this level once, bounced here on this level twice, bounced here on this level 3 times, but failed to take out that 20-day moving average and put in some big red candlesticks to the downside. So we broke this support here at $212.71. And we came back to test the previous support at 209.17. This previous support at 209.17 is from way back when. And below that level, we can target 203. So that's what I'm targeting. I'm targeting, I'm letting it, maybe it'll consolidate right underneath this level, try to take it out or something, but I'm targeting 203. Pretty much the range of this candlestick here, right? I want it to go down to 203, and then from there go down to 200. And then from there we can kind of see where it goes. And it's a very clean downtrend, right? We have lower lows and lower highs throughout this entire thing, so no reasons for it not to continue. There's nothing saying that this can't continue. So that's pretty much what I'm targeting. Main target will be 203. So as long as it doesn't rip strongly into this range of this previous candle on Friday, then I think it will continue to the downside. You could probably hold it for a couple of days. Next one to the downside is MRK. MRK is just at a level where it's broken the previous resistance of the week, right? It made a new low of week on Friday. And so it might break down and take out these previous levels here. So just some clean levels to the downside with no major support. Right. So break down below these levels. And then, I'm not looking into the future, but if we do get below that level there, we have a nice little future targets here with the $100 level target, which is a psychological level. And then underneath that, we got the 200-day moving average. So get rid of that. Oops. Get rid of that. And this is just a very nice setup because we have the RSI that's pointing straight down, the TTM, which has a lot of bearish momentum to build, and the MACD, which looks like it wants to continue to, it was weak. It was showing weak bearish pressure, and then on Friday it woke up, right? So it might continue to build pressure to the downside. And yeah, more than anything else, it's just some clear targets, 200-day moving averages right there. Very, very nice downside setup. If we were willing to play to the upside, we got to get through pretty much all this price action. And then we got the moving averages as well. So that's why I don't love it to the upside, and it's not like we have to undo pretty much the whole day of trading and then work our way through these moving averages and then work our way through all this volume. It's right now, it's not lovely to the upside. It looks much more attractive to the downside, especially with these clear levels to break. So very simple play. Next one is BYND. BYND is a similar setup where we have previous resistance. We're kind of just sitting on it right now. And that 100-day. So underneath those two levels at $15.34, we could target the $15 level, which is the bottom of this candlestick. And then underneath that, we have the $14 level, which is the bottom of this candlestick. We're sitting beneath all moving averages except for that 100. That 100 might be a non-factor. Look at how this thing has reacted to it in the past. Not much going on there, right? So we might fall right through this 15 level straight to the 14 level. So that's what I'll be watching. Underneath the 14 level, we have a lot of previous levels, and then like really back to the range that we've been at in the past, which is all over here. Let me actually throw on a volume profile on this. Let's see. Volume profile. Oh wait, I have it here. No. That'll take too long to set up. But basically what I'm looking at is all the price that was in this area here, you know, starting from back here, it kind of formed like a broadening formation, kind of megaphone pattern. I'm like seeing it with my eyes right now, you know, where it's like making higher highs and making lower lows coming out of this level. But a majority of the volume is sitting in this area here. And so I kind of want to see it just work its way back to the bottom of that area. Very simple. The next one is Baidu. I like Baidu to the ups. I like it to the upside. It can go another direction, but I do like it to the upside. I think it's more attractive, especially after bouncing off this 200-day. You know, broke all this previous resistance from Wednesday, Tuesday, Monday, and last Friday, and the Friday before that with this one move, right? Very nice move out of all that consolidation. With some clear targets to the upside, right above 146.84, which is the close. We can target 148.59. And from there, we got 152.45, and then from there, 154.66. And then from there, we can target this level up here. This one up here, right? 160. But if we fail to take out the highs, you know, I don't love it to the downside just because we have the 50 sitting right there, which can act as support. But underneath the low of day at 141.28, we got 139.27 and then 135.71. And then below that, we got the 200-day as kind of a weekly, you know, a target for Friday, right? So either way, it has a nice equal range to the upside or downside. I like it better to the upside because we got that 50-day sitting there that can act as support very, very easily. So that's that with Baidu. Macy's. I like Macy's again to the upside. It can go either direction. Right now we have an inside bar on Macy's on Friday's price action. So does that keep happening? There. So just zoom in on this a little bit. So we have an inside bar on Macy's. Now we have a consolidated price. If I do like a 1 hour on this, then there's a inverted head and shoulders on this. Right, here's your shoulder over here at like $18 mark. Here's your head down here at the low of Wednesday pre-market. And then here's your shoulder here that formed on Friday, right? So nice setup to the upside. Let me go ahead and draw that. There's your neckline. And then we can also just as easily draw this this support level there. Right, so nice little wedge, inverse head and shoulders with a neckline right there can break easily and hit this $19.23 mark. Above that, there's a little bit of a gap to $19.49, and then above that, we can hit that $20 mark, which coincides with the 200-day moving average. So that's what I like about it. I think that it's just a clean setup to break to the upside, fill this little gap right here, and then maybe hit the 200-day. Either way, up or down, right? That's nice to upside, but if we do downside, we have some clear previous lows of Thursday and Wednesday to kind of target. Very simple, nothing much to it. Let's see, and then we can't ignore, you know, this is the MACD's losing bearish strength, so it looks like it's working way back to zero. We have the RSI, which is borderline oversold and pointing down. So I mean, it really can go in any direction. It looks like there's a lot of room for it to move to the upside, but I'm not one to say, oh, hey, we're at 28, so we got to go up automatically. Like, things don't work that way. And then the TTM is same thing. It's kind of losing. Well, it was It was losing bearish strength on this candle, but then it kind of picked it back up on this candle. So so not much there, right? The next couple of days will tell us on the TTM. But in the next couple of days, we can easily have filled this gap or have broken down, right? So I like it to both sides, but I'm favoring the upside right now. Next one is Amazon. Amazon is an inside bar. We have clear targets to the upside and downside. Break above the $100.98 mark. We can get to 101.78 from there, 102.67 from there, 103.95, right? And then break down below the low of day. Through the 50, we can target the low of the previous day at 95.61. And then through the 100 day and 20 day, we can target 93, what is this? 93.07, right? So 95.50 and $93, right, will be the targets after break of low of day. Break of high of day would give us 101.78, 102.67, 103.95. Above that 103.95, if we get to that point, we could target the top of this wick, which would probably coincide with where the 200 days moving average is going to be at that point. So, well, it'll be a little bit lower, but you know that'll be the target ultimately, right? It'll be this top of this body here, maybe this wick here, and then the 200 day, which will land us like around here somewhere, right? So some nice upside targets. Again, we looked at this a second ago, but Amazon looks like it has a nice upside move. Inverse head and shoulders here. We have a shoulder over here. We have the head down here, another shoulder forming up here, a little higher than the previous shoulder, and where our neckline would be right around the $103 mark. So nice move to the upside. Above that 200 day, and Amazon hasn't been at the 200 day. You know, last time I was at it was Feb 2nd. Before that was August 16th, and then before that was back over here in April of last year. Was the last time that it was above the 200 day moving average for a couple of days, right? And then the last time that I was actually trading above the 200 day moving average was back here in December of 2021. So it'll be a nice time for it to kind of pop over about a year later, right? From here, a year later, and then kind of see if it wants to work its way up to the upside. But I like it for an upside move, but it can really go in any direction. So as you can see, I have the lines marked up there in both directions. Below this 93, we can target the bottom of this body here at 89. So let's just call it 90. You know, 89, 97. Let's just call that 90. So some clear targets to the upside, downside for Amazon. Next one is Lulu. Lulu formed an inside day on Friday. It's sitting within this channel here, and it's below all the moving averages. But it can go in any direction. I mean, you know, it's sitting kind of like in the middle of the channel, right? Break above the high of previous day, we can target 302. Break below the previous day, we can target the bottom of this here at 286. And then below that, I know there's a nice little bounce. Yeah, there it is. So first target to downside would be 286.58. Next target would be, I would call it this one here, 286.50. 285.50, and then underneath that would be 279.10. At the break of the bottom of that candlestick there. Break of the top, we hit that 302. Above that, we can get to this 305 level. Above that, we can get to 309. So back to this channel here. Right, back to this channel. Let me get rid of this. Oops. Get rid of that. We could keep these. But yeah, clear upside and downside on Lulu. And then Lulu looks like it's losing bearish momentum. Nice clean curve here. So I can easily go back to the zero line. RSI is pretty cold. It's sitting at, what's that, 39, so it's pretty cold. And TTM is losing bearish momentum. So again, this kind of favors an upside move. But we'll see. You know, I set an alert for both the high and the low of the day of Thursday, and so give me the range break, and I'll see where it goes. Next one's American Airlines. American Airlines is pretty much the same setup as Lulu. It has a inside day, Now, these blue lines are from a long time ago, right? These are from summer of 2022, and they're still kind of intact. It's just funny to see how the lines interact with the levels, with the price. But we actually have a double inside. Let me get rid of all these lines. I just had to appreciate them publicly, right, to give them their flowers. But goodbye. So we have and let me get rid of these. Get rid of these SMAs for a second. We have this double inside day on American Airlines, right? Do that, and then I'll just leave it like that. So what that looks like on like a 1 hour is a wedge, right? That's all that it looks like. You know, the highs are getting a little bit lower and the lows are getting a little bit higher, right? That's pretty much all that's saying. Double inside day. I like playing these because you know that at the end of this setup, there's going to be a nice move to the downside or to the upside. So right now, I mean, there's no way of saying, hey, it's going to go up or down. You know, especially being in the middle of this range. Look at this, like all these green candles here. So we can easily go down and continue to move to the downside, breaking down all of these previous lows. Or we can use this opportunity to form a higher low, right? Here's a low, previous low here. We can form a higher low and then from there kind of work our way up, fill some of these gaps to the upside. So I don't know what it's going to do, but I do like the fact that it's a double inside day showing some nice coiling. If you look at the MACD looks like it is flattening out, right? Look at where this low is and look at how far this one is and how far that one is, how far that one is. Now they're getting kind of closer together and it looks like it's getting ready to turn over, right? So we'll see what it does. But tomorrow might be an interesting day for American Airlines. So I went ahead and just set my alerts for the 2 levels. And if you're interested in it, then we can watch it, see what happens. Next one's Pinterest. Pinterest has kind of a, you know, it's been trading within this range for quite some time. As you can see by my 2 lines, it's been falling up and down between the 2 lines. We have this massive consolidation here, big, massive move out of that box, and then fell pretty hard right back into the bottom of the range. A lot of sellers stepped into the top of the range and brought the price back down. A lot of buyers stepped in and brought the price right back up. So now we kind of have a 3-bar play setting up here if it wants to continue to move to the upside. I have an alert set here for the 27.19 level, which is where previous resistance was here and here, this day and this day. Now I want to see it clearly take that level out before we can play it, but because I think calls are risky underneath that level, just because of how much chop there is here and how much sell pressure there is here on these 2 days. I do kind of want this to fall to the downside, especially since we weren't able to get back into this kind of wiki level here too much. So I kind of want to see it fall back to the downside. And if we do get that downside play, then we can target the bottom of this candlestick as the first target, which would be a nice move, right? From $26.16 down to $25.02. That's an over $1 move. And then from there, we can target the bottom of the range again, which is $23.77. So I kind of want it to fall, but it can go in that direction. If we do get that 3-bar play, then this will put it at around $28 or so, within the next couple of days. And again, if not, then we'll fall back down to 25. So one way or another, we have a nice little setup for Pinterest. Meta is my next one. Meta has formed a cup and handle here above this gap after earnings. Nice little cup and handle breakout to the upside, form, 1, 2, 3 days of all new highs, and then it pulled back. Now, the pullback is a little bit scary. However, if you look at it in context, I want to come back to this level. Okay, you look at it in context, and all this can potentially do is pull back to test previous resistance. Put its feet down and say, "Oh, I can stand on this ground. All right, cool. Let me set up support right here, and then let me work my way back up to break out and make a new high." Now, if that does fail for whatever reason, let me get rid of some of these levels. Actually, I have lines on this from like years ago. It's fucking crazy. Let me leave this one. All right. If we do find support anywhere in this level here, between where it's currently at 195.61 and $190.36, then we'll continue to the upside. But if we don't find support and we come back to test the low of this, and we come back to test the low of this, and then we can fill this gap and come back and test the low of this level here. That's why I kind of left these previous levels intact, because if we do make a downside move, it'll target all four of these levels, right? Starting with the 190.36 and working its way all the way back down to 176.84. Now, I don't know if that's going to happen, especially with how big this breakout was, but we'll see. We'll see. Momentum, MACD's turning over. You know, there was a weak push here. So it has an opportunity to kind of go flat and then work its way back up. But if not, then it can easily fall down, right? The RSI it was overbought, and now it's pointing straight down at $64. 64, and it has all this downside to test. So can easily come back down. And then the TTM, again, TTM is pretty slow. So, I mean, this can continue to climb even as price falls, unless price falls really, really hard. So, you know, I don't really give it too much energy during the daily time frame. On the smaller time frames, it's really good though, right? Like on the 15-minute, 30-minute, 5-minute, 1 minute. So I do like it better to the downside. However, it can just be an easy pullback for a continuation. I'm not going to put too much, like I'm not going to, you know, we can watch it for now. I won't give you, I mean, the plan would be like break above the high of day, go to previous high of day, and then continue. I don't think it's going to do that right now. I think it really clearly has to test this level here. So I'm going to go ahead and put this in a dotted line, a dashed line rather. Oops, sorry, that's the wrong one. Dash line for these two top levels, just because I just don't think that, you know, and again, I don't know, who knows, the QE thing might be, the quantitative easing thing might be really good for tech, and Meta might go ballistic, but if it doesn't, then I think nice downside. Okay, so now I have a bunch of green setups. I have 7 more and then we're done, right? Starbucks. I like Starbucks just because it's sitting at a previous demand zone. Every time price gets to this level, it kind of pops, right? You see how over here kind of based a little bit, and then it popped up, came back down, tested the level, and then continued to make a nice move to the upside. Same thing, we kind of fell back into this level, and buyer opened here, price came down, buyer stepped in and brought it back up. Same thing on Friday, price came down and buyers bought it back up, right? We still formed a red candle, but buyers, the key part here is that buyers are here. There's buyers present in this level. So the buyers might be strong enough to bring it back to 100. So my target would be 100 for this, right? 100, which is right here. Above that, 101, which is right here. And then above that, 102, right? Pretty simple. Let me draw the 100 level here. 100 level. Close enough. And then I have 101, which is right here, and then 102, which is right there. So that's what I'll be targeting for the upside move. If we do get a downside move, then, you know, break low of day, and we can see the previous low, which is on Wednesday, and then below that we can target this low here, and then this low there, right? This low of this candlestick here at 96.88, and then the low right underneath that at 96.17. So nice clear upside, downside, nothing too crazy. I do like it to the upside better than the downside, especially since buyers are present. But I'm not gonna ignore the downside setup if it's there. Let me just adjust this for some uniformity. Lines there, and I'll put some dashed lines here so that you can see if anyone's reviewing this, or you're taking screenshots, or whatever the case is, and you just want the screenshots for the levels, and you have your bias. You have my bias rather. Okay. So that's that. MACD is losing strength to the downside, right? Losing some bearish strength, working its way back to zero. It formed there's kind of an inverse head and shoulders on the MACD. So, but really the key part is that the MACD is losing strength and trending upward. You see that kind of, lower, the higher low on the MACD, which corresponds with the higher low on the chart itself, right? Higher low here. We also have a higher low between this and this. Now, looking at the period where the MACD formed the low was here, at this level here at 101.99, and then this new low is down here. So there's a little bit of divergence there, right? The MACD is forming lower lows, or higher lows rather, but the price is forming lower highs. So there's a divergence there. So one of them has to give. Actually, usually if the momentum indicators will be stronger than, because they follow trend, right? They'll be stronger than the price. So that's actually a little bit better for our bull case. Because one of them, they just either the MACD has to break and change direction so that it can follow the trend on price, or price has to break and change direction so it can follow the trend on MACD. Usually the price breaks and follows the trend on MACD. So I didn't even notice that until now. So that kind of strengthens my thesis for Starbucks. We'll see. Next one is Costco. Costco, I had it, it just goes pretty much wherever the hell it wants. Right now it formed a red candle, but it's a bullish engulfing because it had a lower high and lower low. Lower low and higher high than the previous day. And its price is trending upwards. Now, the first entry would be above 490. Above 490, we can target 495, and above 495, we can target 500. From there, above 500, we can target some of these higher levels, maybe at 510 or so. But right now, it looks like it has a lot more upside to it. Let me cancel it. I actually want to do it on the level, not the line. Do it there. Semi-alert, so it breaks to the upside. And then if we break to the downside, we have a lot of candle to undo underneath the bottom of the low of day. We can go to 476.89, which is pretty much back to kind of where the trend line is. And then if we break that trend line, we can go down to 468.38. But again, right now I'm favoring the upside with the way that it's set up. And then you have the MACD, which is breaking to the green side with the signal and MACD line underneath. So that means that they have a lot of room to travel to the upside. So there's a lot of upside on this. The TTM or the RSI is flat. It's like dead flat. So it can go in any direction. It's kind of pointing down at the moment, but that's because we formed the red candle. We'll see what happens on Monday. And then the TTM, although it's slow, it's at a point where it's almost at the zero line. Nice smooth curves, right? Nice smooth move to the downside, smooth move to the upside, smooth move to the downside. And it looks like we're just targeting zero right now. So we'll see what happens with it. AMD is a monster, absolute monster this past week. Congrats to everyone who played it and made money off of it. Right now we're targeting some previous levels, and let's look at AMD on a broader spectrum. We are still within this kind of broadening formation where price is discovering itself. It stopped after a while and started forming higher lows, right? So we have all these lows over here, we have this higher low over here, now we have these higher lows over here. So it's in a strong uptrend, even though it's still not as high as it was in the past, right? You're looking at all the way to your left, but this is a very, very nice setup and cannot be ignored. Above the high of day, I have 97.84 as the close, and I have this 97.60 line that I have from the past. If we can hold at that level, make a new high, and then break above 100, then from there we can target that 101.85 level. Above 101.85, we could target this pivot right here. Let me just go ahead and set a line at this level here. We can target this pivot right here. Why am I still... line. So above the high of day, right? First target is $100 level. Above that $100 level, we got the 101.85. Above 101.85, we got 104.59. 100 is going to be a strong level for AMD to break because it's obviously a psychological level. Just put it there. And then above that 104.59, we got this nice clean pivot over here. This 3-candle pivot. At 109.50. So some very nice clear targets to the upside. I don't see it doing anything but continuously to the upside. If it does fall, then we have to break the low of day, and then we can target the bottom of the candlestick here. It won't. I don't think it'll do that. I don't know, right? Who knows? Nvidia has Investor Day coming up on either Tuesday or Wednesday. So that might be a catalyst for some movement in AMD as well. I was on a call on a webinar that Sam was presenting earlier, and he was talking about how if there's a 10% chance that Nvidia guides up, and if Nvidia guides up, then that's going to give a nice move to Nvidia, and like almost like a $40 move to Nvidia to the upside, which will obviously put AMD into like well into the $100 level, right? So I'll be watching for that on, I think it's either Tuesday or Wednesday. So once I find that, I'll post it. It might be on their chart actually. Let's see. Let's see. NVIDIA GTC event to showcase generative AI arms race. The conference starts on Monday. Raise the price target from 305 to 305 from 245. Despite macro concerns, hyperscalers are prioritizing cloud capex spending in a broad set of generative AI ML use cases. We view NVIDIA's flagship GTC conference next week to be a key event to showcase a future of generative AI for the industry. So you can't ignore NVIDIA and NVIDIA's presence in the space. So I don't have NVIDIA, I don't have a clean setup for it to the upside, but it might, I'm going to go ahead and set an alert for the break of either high of day or low of day and use that. I mean, NVIDIA by itself, we're usually in an NVIDIA play every week. We do have a little bit of a gap to fill to the downside here. And we have this whole candle to undo if we wanted to. But if we continue to the upside, then we got a lot of room as well. I really like it actually to the upside looking at this setup. So so yeah, wherever NVIDIA goes, Starbucks will go, right? Starbucks will follow. Next one is XLF. XLF, I mean, the only reason I have it as a bull case is because it's sitting at the support line, and also because of all the liquidity that's about to enter the market. That might be bullish for banks. It might just save banks from this free fall. That's literally the only reason. I set my alert for the high of day. Break above high of day, we could target the previous day's high, which is 32.34. Above that, we could target 32.85. Above that, we could target 33.72. But if this trend line is just like a figment of my imagination, and if the quantitative easing that's forced by all these banks is unreal, then there's a nice downside play, because basically what we'll do is break below, and it's also an inside day now that I'm looking at it, right? Because the low of Thursday was $30.90. The low of Friday was $30.90. So still within the range of the previous day. So we have the top of the range to test. So it can easily just break above the high of Friday and go to the top of this candlestick and then fall, or break below the low of day and bring us down to this level and then this level, right? So either way, let me change this to blue, because I am bullish because it's at the trend line and because of forced quantitative easing. But in terms of the technicals, this can go in any direction, especially with it lost some bearish strength and then it picked it back up a little bit, right? Same thing with RSI. It's like it kind of was oversold, but then it's like, I don't care, I'm pointing down. And TTM is strongly in the red, so it can continue to move to the downside, or bounce and move to the upside. Who knows? Next one is Google, and I just have these couple more, and then I'm gonna call it after that, guys. Next one is Google. Google above this previous high here at $103.14. We can target the range of this candle, which will put us at 104.82, and then above that, I think we'll go straight into the $108 mark. So I'm just looking for a nice continuation out of this double bottom, right? Here's your bottom one, bottom two, these two here, nice bounce out of that continuation into the 108 mark. If we can get above the 103 mark and the 105 mark. MACD looks like it is starting to pick up steam on the bull side. The RSI it's up quite high, but there's a little bit more room before it gets signaled as overbought. And then the TTM just started going green, right? It's hard to see, but you have two green histogram marks here. So it might continue, right? So that's Google. Next one is DocuSign. There's just a nice little gap to fill here. And then we've been forming higher highs. We had an inside day on Wednesday. We broke that inside day and formed a new high, and then above that we formed a new high, right? So I'm just continuing the trend here. I'm just continuing the trend after this bounce, continuation into this zone here, between where it's currently at now at 58.52 and potentially 61.27. If it's a doji at the end of a trend, that means it might reverse and pull back to that 55.86 level. So either we break above and we target the 63.31 level, or we break below when we target this 55.86 level. So I'm going to go ahead and mark that as blue because it can go in any direction, and set my two kind of entry points. I think it would be a safe entry either way, up or down. I don't think there's a risky entry just yet on this. Let me remove this line here because it's a little bit confusing also. Right. And then actually before we get to that 63, we'll probably stop at this 61.96. So that's it. I will target one or the other. Let's see, let me zoom in on that just in case anybody wants to see it a little closer. And then MACD looks like it's working way back to zero, so continuation to the upside. RSI is flat, can go in any direction, and the TTM is working its way back to zero, so it can continue. So right now everything looks bullish, but again, it's a doji at the top of an uptrend. Even if it's a 4-day uptrend, a doji usually at the top of an uptrend or bottom of a downtrend usually signals a reversal. So let's keep that in mind. Last one is Domino's Pizza. I think we did it in a video already, right? Did we? Yeah, we did. Next one is Domino's Pizza. Domino's Pizza just looks like a nice little triple tap on this box after a gap down, right? Here's one tap, two tap, three tap. So it can consolidate underneath this box and then continue to move up, or it can fall down pretty hard and target the bottom of this pivot here. So we'll see. It's very simple, nothing to, no need to overthink it. Break below the low of day, target this, and then target this, and then if we can even break below that, we can target 291. Break above high of day, target the top of this little pivot, and then from there we can target some of these levels within the gap there, right? And with these two, I just targeted the bottom of this wick. I don't know why it keeps doing that. It must be connected at work. The bottom of this wick here and the bottom of the body here are my targets. So it can go either way. I like it to the upside. I'm favoring the upside, which is why I put that green little hash mark there. MACD's in the bullish side, and I'm drawing lines in the MACD. MACD's is bullish right now, and the lines are way down here, and they have lots of room to swing to the upside. I love seeing that. I love seeing when these signal lines are down here and when this is already above zero. That's beautiful. The RSI is pointing down because of the red candlestick, but we're forming higher lows on the RSI as well. So no divergence here, right? Unlike what we saw with Starbucks, that's forming higher lows. Get rid of that. That's forming higher lows. The MACD is already flipped, and the TTM is working its way up. So it all looks really good to me, right? To the upside. So that's it, guys. That's all I have for you. Thank you for joining us once again. I'm gonna go ahead and put the replay out. It should be out in about an hour or so. We discussed all of the following, and again, let's look at ES futures while we're here. See where we're at. All right, so inside bar towards the bottom of the previous days candle. We do have this anchored VWAP here that might act as support. This VWAP is from, do I have this one labeled? No, I don't have it labeled. But this is a VWAP. It looks like it comes from this swing high here. So it might act as support. Maybe, maybe not. I don't like to really look at futures and speculate. I just, what's the price going to be at 9:30? So we'll see. We'll see. Above the 4,000 level, which is going to be a clear level of resistance. We can try to test the 4060 back to the kind of this pivot here. There's a potential inverse head and shoulders that's forming. Here's a shoulder, back to the neckline. Here's a head. Maybe we get back to the neckline, and then, you know, and then in the future, some future date, there'll be a potential shoulder there. So I'll just keep that there and we'll watch it for the next couple of months or weeks or whatever. Zoom out over here. Yeah. All right, guys. Thank you so much for joining me tonight, and I'll see you all in the morning. Have a good night, everyone.
Thanks, Huey. Have a good one.
No doubt.
Thanks, Huey.
You're welcome.